up guys, what's up? It's your boy the Undisciplined Trader here, and today is Tuesday. So because of my schedule at the moment guys, I'm working, basically wake up 5 and I do trading from about from 6. Usually what I do is from like quarter to 6 until 12, and I start work at 12 and then I finish work at 8. So I go gym after that, and then I don't really have time to edit the videos on the same day. Not even edit, just make the videos, because there's not much editing in here anyway. But as you guys know, yeah, like that's my schedule right now. Before, sometimes I work 8 to 4, sometimes I work 10 to 6, but the schedule right now is 12 to 8 for the whole month. So basically, yeah, I trade in the mornings, and yeah, yesterday was quite a really unlucky day. So let me basically tell you guys a little bit about the strategy, right? So it's analyzing price action. So I read the trend and I read where liquidity is. Liquidity is basically like equal highs or trend line liquidity, you know, price coming like this. That's liquidity here. Price, usually the banks want to take the retail traders out, so they take the stop losses. So we use these things to make entry, and basically price is trending. I'm gonna enter here. I'm gonna enter these areas with a tight stop loss, 5 RR, 5 risk to reward, and really tight stop loss, less than 3 pips usually. So that's essentially it, guys. This strategy is just so you guys have more of an idea. So you can read my notes as well if you want. I'll just go through the trades, each one. So the green dots, right, they're the highs and lows of the 1 minute. Now this is subjective, okay? For example, someone might think that this is the high and this is the low, and these in between don't exist. Or someone might think that this is the high, this is the low, high, low, high, low. They can think that this is the high, this is the low, this is a high, and this is a low. So this is where you get trades. This is where you make mistakes. Not mistakes, but this is where you'd lose essentially, you know, because it comes down to subjectivity. The highs and lows are the 1 minute. Whereas 5 minute, 15 minute, those are much easier, and you won't really make mistakes with them. So essentially, let's go to the 15-minute time frame, so you guys can see things a bit better. So where are we? This is it. So there's a lot of boxes and lines. Essentially the blue boxes are order blocks, just candles basically that I choose that are 15-minute candles. That's the blue lines. The purple lines are 5-minute candles. Okay, this big box is a daily candle. Okay, and the green box are 4-hour candles. I don't draw 1-hour candles. Okay, so let's go through the trades. So I believe that's all the basics and everything for you guys to have a good idea of the strategy. So yeah, yesterday basically I lost trades simply due to subjectivity in the 1 minute time frame. So here, to me, this was a trend change. Okay, lower time frame change, trends change, or trends shift. But as you can see, I was incorrect, because the high was here and this was the low. This was just one move, and as you can see, price came here to this order block and went all the way down. But I didn't take this trade because of this. I thought that price had changed trend to bullish. So you can see, because we broke this high, so now we're bullish. That's what I had in mind. I took this trade, and unfortunately we got taken out. You can see the purples, these are 5-minute candles for what happens next. Okay, that's minus 0.5%. Each trader risks 0.5%. Now when there's you can see here me write down minor breaks of market structure. Okay, that's what MBMS stands for. The blue lines are the highs and lows of the 5 minute. Okay guys, so here price made a 5-minute break of market structure, essentially, you know, making a new low. That's the high, that's the low, and this purple line is what I should have drawn. I had drawn this red line, which is the 1 minute, and I could have entered here, but then my stop loss would have been bigger. But in reality, I should have entered in the middle of the purple line because it was a 5-minute break of the structure, not just a 1 minute. So when it's a 5-minute, I use the 5-minute order blocks, but I didn't do it this time because I didn't really notice it, to be honest, and I didn't get tagged in for this order, which would have been 5RR, as you can see. So I didn't get tagged in, so it's still -1. Now this trade here was a little bit stupid, not stupid, but as you guys know, this strategy is kind of relatively new to me. So the plan is not every day I'm making some changes here and there. I'll talk about a little bit of it, some of the changes I made earlier today. But essentially I don't trade once the higher time frame trades has been mitigated. Essentially, mitigated means when price has touched it. Okay, so essentially price touched this daily candle, so I shouldn't be trading short, shouldn't be taking short trades near here, because you know, once it taps this, usually it goes. So it didn't. The reason I took this trade is because there's still a big area, and I like to see price come to the 50%, which is the middle of, so around about here, this kind of area here, you know. But sometimes it doesn't. Sometimes it just taps it and goes. So I took that trade, going over -RR, -1R, and then I took this really nice trade here. As you can see, we're now bullish. We changed trend here, bullish, bullish, high, 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 low, high, high, and I entered on this breaker structure, these candles here. Entered here, nice tight stop loss. Price is breaking market structure, making higher highs in the 1 minute, and price came to here, and my take profit is 5RR. I don't change that usually. Sorry. So here, let me just make this nice and easy, guys. It's a lot of information here. So as you can see, this is my low, this is my high. Okay, in the 5-minute we made a low and a high. And like I said, the 5-minute breaker market structure here, so I should use a 5-minute box, which is this big purple one. So I did a scale in, I put this break even, I did a scale in into price here, and I saw that this here could be a questionable possible trend shift. As you can see, I wrote that down. So I saw this trend shift, but I was like, you know what, it most likely isn't going to be a trend shift, you know. But it turned out it was. So essentially my high should have been here, my low should have been here, and this trade I would have not taken. But obviously I have to make a decision, don't I? Is this a trend shift from what I can see? If it is, then go for it. But then in that case, I wouldn't take this 5-minute trade because it's against the 1-minute trend, and I want to trade with the 1-minute trend always, always with the 1-minute trend. So price comes here, I get tagged in. Right about here, on total, both orders were a 5RR. Okay, I could have easily taken 5RR, but I didn't. Okay, and well, it turns out price broke market structure. So essentially, let me draw for you guys. That's the high, that's the low, that's the high. Now this becomes the low. Okay, so entries around about here are valid, you know. Entries around about here are valid. Motive, like I said, are liquidity, so equal highs, trend lines, you know. Here calls is the same, so there's a motive for price to come down here. Essentially, a trade, what I should have done was either take some of the partial profits and put them to break even. I did put both to break even and just go for this trade. Then in that case, I would have at least won 5 risk to reward. Anyway, so what actually ended up happening was I took a trade here as well because I got a bit frustrated. There was this 1-minute candle here and I should not have taken this trade. I took a loss here as well. So that's -3RR. And then price came to mitigate the daily again. And here I was quite unlucky, I have to say. There was a breaker structure here. You can see lower, low, lower high, low, low. That's a break of structure. And then a break of structure at the bottom here. That becomes the new low, and that becomes the high. Price breaks that, so this becomes the high. Okay, not by much. And then we have motive, equal highs here. I took this trade, but unfortunately price decided to come a little bit lower and lower, and yeah, so essentially price, I only trade up to 2 p.m. but after I lost this I was just a bit frustrated, and yeah, so I ended up with -4RR yesterday, which is 2%, and that's okay. So that's basically it, guys. Let me show you guys basically what I would have done in this situation had I not taken this trade. For example, this is a break of market structure, okay? Because we took out the high, as you can see. Now, I have a few candles to choose from. I can choose from this one, or this one. So I only choose, in my trading plan, I choose the last candle before, the break of structure, which is this one, and the extreme, which is the last one. In this case, it would have been this, but I also do blocks, so I could have done something like this, or even like this, and then put it in the middle, just in front of the 50%, which is the middle. Then 2 pip stop loss, or 1.5, or 2, and then I go for 5 RR. I can go for more if I want, but I go for 5 RR just to. I don't like to see my trade, as you can see, I get frustrated. I don't like to see my trade go near profit or whatever, and then it comes back and I don't get anything. So essentially, yeah, essentially that's the strategy, guys. Yeah, so that's minus 4R for Monday yesterday. That's okay. I can get 4R in one winning trade. No problem. So yeah, minus 4R, and today I've actually, let me talk to you guys through. So I've been changing the plan and trading these trades demo for the last 4 or 5 weeks, and I noticed that my trading time, I had to change my trading time because I kept losing trades before 8 a.m. So I'd be like 1, 2, or even 3 losses before we even hit 8 a.m. So I calculated I lost like 27 trades or 25 or something crazy like that, and I only won like 3. So I was like, nah, I need to stop this. And then I calculated all my trades from 8 a.m. to 2 p.m. and I actually made 24%, you know, in the last 30 days. So I made 24% from my trades from 8 a.m. to 2 p.m. So I changed that today, and I'll even give you guys a brief, even show you guys briefly the trades that I took today and the trade I'm in. I could have easily taken this to here just now, but I actually took, so price mitigated this order block here. There was a flip entry, which is quite complicated. It's basically the last point of higher demand, and yeah, I was going to target up here. I did think about it, but it's not part of my plan. So my only trade 5 RR. I'm going to start practicing soon to take more trades to higher risk to reward, because with this strategy you can. Some of the guys in the group, they take trades to 10 RR. Many trades I've taken have gone to 10 and plus RR, but I just choose not to, basically. So yeah, I took, as you can see, again, this is when I realized, I was like, okay, I need to stop taking trades anymore, because as you can see, I lost 1 here, I lost 2 here, and then I win 1. You know, after this, the only reason why this one I took this trade before A is because it mitigated a 15-minute order block. Okay, so it's a lot more higher probability. But anything else, I'm not taking before 8 a.m. anymore. So that's that for today, guys. I hope you guys enjoyed the video. I hope you guys learned something. If you have any questions about this strategy or anything like that, about smart money concept, which is essentially what this is about, then let me know. Put in a comment below if you have any questions, and then I'll be happy to answer them in the next videos. Peace.